So, we've had some very interesting news about the US deficit budget. So, the purpose of these, of course, tariffs is to generate a little bit more mullah for the United States. Now, of course, we do have the Supreme Court hearing on whether or not the tariffs were deemed illegal. If they are deemed illegal, we've got a major problem. So that means China and all the other nations, if you remember that little scholar that Trump had, he was reading off all the nations on the tariff amount percentages as such. You know, South Africa, 10, Zimbabwe, 25%, China, 15, Euro, whatever. All those nations that have been paying tariffs are effectively going to get a refund if the Supreme Court rules that the tariffs are deemed illegal. But the current situation right now is the US deficit has hit another record. That's a little bit of a problem. And we're going to be explaining to you why that is a big issue for Donald Trump. And then, of course, you've got the idea of interest rates not going anywhere. It's more than likely that we're not going to get a rate cut in January. Going even into March, probably not going to be the case. And with deficits increasing, the sentiment across investors is, well, if your deficit is increasing, that means you're spending more than you are earning. Just to put it into perspective, for every dollar that the US earns, it owes 127% on top. That's what you call a fantastic printing business. Anyone wants to get into the game of printing, look no further than the United States. We're going to break it all down on other news that's hit the marketplace. Of course, Intel swiping a nice move to the upside on their chip sales, massive demand. You've got Bank of America doing pretty well, but of course, they too have a little bit of an issue in regards to debt underwriting. And we saw what happened to JP Morgan yesterday, but Bank of America have done pretty well. Wells Fargo, earnings per share didn't really quite come in too great. But again, if banks are struggling, you can expect everyone else to be struggling. But the question is, does the market care? Geopolitical tensions are sending everything to the moon. And when I say moon, I'm talking about the silver spoon. You like that one? Anyways, silver's going up, it's not stopping. Gold's going up, it's not stopping, ladies and gentlemen. Risk on is something very interesting right now because you have a disconnect with positively correlated assets across the board. The dollar is down. Oh, sorry. No. Yes, the dollar is down, the euro is down, the gold is up, the Nasdaq is down, Bitcoin is up, gold is up, silver is up, Dow is down. What's going on? Everything should be up relative to the United States dollar, but the dollar is still trading very well. 98.67%. That's awesome. When you start getting into it a bit of appreciation at 100, then of course we now increase our purchasing power, even though the purchasing power for the dollar is actually dog. We're going to break it all down for you. So let's try and keep this live short and sweet, give you everything that you need to know today. We've just had the news announcements regarding the PPI. Let's break it down. So, quite an interesting story. Core PPI month on month came in at 0.0. It's actually coming lower. Okay, and the PPI itself is the change in price of finished goods and services sold by producers. Well, if the prices are actually coming down, that means inflation might actually be something that could actually come down. But we had a flipping FOMC speaker today talking about the idea that maybe we're going to be having this problem with inflation for the next 2-3 years. What? We don't want that. Anyways, moving forward from that, you can see that the core retail sales came in at 0.5%, higher than what was expected, and very much so before the previous reading. It came in at 0.2%. PPI month on month came in at 0.2, above expectations from the last month. And then, of course, retail sales came in month on month at 0.6%, an increase from minus 0.1. That is brilliant. But what's even better is this. This is the economy, okay? The economy. But the problem is the US has increased a post-record $145 billion December deficit as outlays outpace receipts. You want to see what the US is currently dealing with right now? That's what it's dealing with, ladies and gentlemen. In the 1900s, we spent about 10 minutes at 63, so we were in surplus. We've never been in a surplus. All right, don't worry. In 2000 with the dot-com bubble, we were in surplus. Awesome. But that was for about 10 minutes. And then he just slumped. This is a problem. Why? Well, if their outlays are more than their receipts, for the better word, okay, you've got a problem. It means what? Well, it means that the government now has to issue more bonds. If they issue more bonds because they want to try and generate more revenue from offering higher rates of return on the yields on the bonds market, investors might not like that. They might be like, hold on a second, your deficit is horrible, absolutely vile. You're not making any money, yet you're still spending more money. Did not Trump increase the defense budget annually to $1 trillion? Where are you getting the money from? I think he's the kind of guy that's gone into a casino and said, you know what? I'm going to have a good day today. I think I'm going to make about 20 grand in the casino. That means I'm going to go buy that Rolex. I'm going to go buy that bag for the missus. Happy days. He goes to play the roulette, and then what happens? He's negative 20,000, but he'll still go and borrow money to go and buy the Rolex and the bag. He still achieved what he wanted to achieve. That's exactly what Trump is doing. Okay? But the problem that we've got is if the deficit keeps on going and going and going, it's going to be putting pressure on investors to seek more of a rate of return for holding US debt. The more treasuries that the US government issues, the more investors are going to be they're going to be more reluctant to take on the debt at the levels that they are offering them at, which means that the yields will continue to climb. If the yields continue to climb, that means we're going to have higher rates of interest in the near future. We already know that, of course, the Fed itself ain't going to be cutting the interest rates, not even until, in March, there's no interest there. March is 72.5% that they're going to keep the rates on 3.5, 3.75. That's terrible. Going into April, what's the expectation? Still 3.5, 3.75%. That is horrible. June, where are we at with that? Oh, we're moving down to a little bit of a 3.25, 3.5%. All right. But that's in June, man. That's not going to help investors. Going over into the bonds market. Hello, Bitcoin. We'll be discussing Bitcoin very shortly. Going into the bonds market, 2-year trading higher, 10-year bond market itself is trading flat. The 10-year futures are sort of moving up, but then you've also got the stock market. NASDAQ is just playing a different kind of game right now. It's just bouncing in this range. And this, for the QQQ, for anyone that's in options, the 620 zone is a massive zone. Just keep an eye out on this zone. I'm just going to mark it off just to keep that in perspective right there. The 620 is a big call wall. And if they keep on probing it and bouncing away from it, we are going to all-time highs on the NASDAQ. My expectation is simple, that they're going to come and clear this range on the NASDAQ. 628, that's what I'm expecting for NASDAQ in terms of the QQQ, which is the ETF equivalent. And then, of course, you've got NASDAQ price action right now. It's coming back down to the green vector candle recovery, leaving us a red vector candle recovery in that range. But what would then send the NASDAQ up? Well, actually, let's look at what sent it down, maybe. Saks. You ever heard of Saks? Saks owner, Saks Fifth Avenue, filed for bankruptcy. They had $1.75 billion worth in financing commitments. Can you appreciate that? When the rates are high and you got $1.75 billion worth of financing commitments, those commitments are coming in with higher rates of interest, and these guys ain't coming through with it. Now, maybe an opportunity for someone to go in and buy up the company to restore it, who knows? But ultimately, the cracks are starting to show on the impact of high interest rates. Fast for bankruptcy, that is dead. But more importantly, going into it, Bank of America, tops estimates, trading and lending revenue rises, but they did experience a drawdown in debt underwriting. Like JP Morgan, they experienced that. Now, going into it, to have a look at JP Morgan at the open itself, there must be a little bit of a recovery coming into play on the back of the good news from it. No, 308, JP Morgan looks like it's gapping down, 0.82% negative. So that's not really good. And volume is still coming in higher from the previous session, of course. But if investors are not liking the idea of the debt not being underwritten, it means that money's not being put to work. So trading activities means what? It doesn't mean anything. It just means that Bank of America have just received a revenue or income of someone buying and selling. That's not sustainable in terms of earnings per share. You need to have all of the products that you offer to actually do well. Even though it says lending revenue rises, they have experienced a drawdown in debt underwriting, and that is a bit of a problem. But in the tech market, Intel has absolutely ripped it apart, ladies and gentlemen. You can see that. It jumped 7% as AI server chips near sell out. Quickly going over into Intel, just to put it into perspective for you. God, I'm losing my throat. I can see Intel. Here we go. So as a stock, it's, in my opinion, very, very cheap. Okay. And of course, going into the open, it's up 2.28%. Volume is up by 103%. It's not messing about with the number of shares it averagely trades. You can appreciate that. Going into the weekly, you can see that it's just making a nice claim up. If it can take away this previous high over here at 51, then ladies and gentlemen, we're in for a very good ride. Fund ownership has increased from September to December to 3,083. So that's good news. And their earnings per share is due in 8 days' time. So we can appreciate that there's going to be a good reading for Intel in terms of their earnings per share. We look at their quarterly earnings lately, and you can see that it hasn't been a great time for Intel. But in the last reading, it came in, earnings were 150% plus, and sales came in at 3%. So that's good news. Maybe it's because of all the business ventureships that they're getting involved in and the hype behind AI. But fundamentally, in the actual electric semiconductor manufacturing sector, they are all doing well. Relative strength rating of 96 means that other participants in this sector are also seeing the benefit. But in my opinion, Intel is and always will be the leader of it all. Now, moving forward, ladies and gentlemen, just have a look at where we are with cryptocurrency. So as it stands right now, BlackRock, 3 hours ago, have been busy. They've been selling Bitcoin yet again. So we've got 3, 6, 9. Okay, then. So 1,061 Bitcoin has been sold. It's getting quite quiet, if I'm quite frank with you. But remember, they will sell it when it rises, ladies and gentlemen. Speaking of rising, let's just have a look at Bitcoin right now. You can see Bitcoin's making a nice little claim to the upside. Whoops, where are we at? Here we go. Yeah, it's making a nice little pump to the upside. And of course, it's claiming that daily open. And, you know, the strength from yesterday's move is brilliant. But they've been bidding all morning, ladies and gentlemen. You've got to understand that. Look, they have been bidding Bitcoin for quite some time. All right, you see all of this here. This was in, of course, yesterday's price action. But they were bidding yesterday in that range, that corrective move. Okay, so that would be in the Asian session, they were bidding lower, and then of course they've made the move to the upside, and that's brought a lot of excitement for people. Going into the order book itself, you can see that we've got a few offers coming into play right now. And yeah, it looks all good, if I'm quite frank with you. It's as long as they sustain themselves, and that's happy days. But we've got a little bit of a disconnect. The Nasdaq's not moving up, but Bitcoin's moving up. Solana, she's also doing very well. And of course, Ethereum is sustaining very well. You've got to be careful with Ethereum, man. When it moves in a little bit of a tricky way. I'm concerned about this green vector wickless candle right there, which does give us the idea that if they were going to come back down to that, then price could actually reverse from that point very well. But when we go back into Bitcoin, because we only care about the moon and what have you, I took a little trade. I'm not going to lie. Took a little trade on this. We're in $1,155 profit on this move to the upside. That was my entry right there. Of course, I use BTCC when I trade cryptocurrency. And if you do use BTCC, you, of course, get a 15% bonus and what have you. But you get also other perks, which we're going to be revealing very, very soon. And might just be doing a trade copying. That way, you don't even need to listen to me anymore. You just come in, tune in, listen to the news, and then I just crack on with trading and do it all for you. But we're going to try and work out the logistics for that. So that's going to be for anyone that does join via the Traders Reality link, because you get the benefit of the 15% bonus first time. All right, cool. So that's in the pin to the top of the chat. So check that out. But you can trade silver, gold, Bitcoin, NASDAQ. That's why we're using BTCC, because you get to trade stocks. You get to trade all sorts of assets with BTCC. All right. So let's see how this play works out with Bitcoin. It seems like it's doing really well. It's making a nice move up. Probably move that to break even right now. And yeah, wait for that to do it. But anyway, we'll sort that out another time. Anyways, so Bitcoin, 95,633. It's doing very well. 96 could be on the cards. Who knows? But the market, it's not open just yet. We still got 10 minutes. Going over to Euro, be mindful. Stay away from Euro. Even if Euro pumps today, just stay away from it. Volatility regime for the Euro is showing me that it's not going to be doing too much. Just avoid trading Euro. But going over to gold and silver. Listen. Gold goes up for two reasons. One is the inversion to the interest rates, okay? So interest rates are coming down, gold goes up. But you've got geopolitical tensions, all right? The story with Iran, Greenland, and all that madness that's unfolding. Okay. That's what's forcing investors to go into gold. We could assume that things like this are causing gold to go up with people losing faith in the US dollar. But ladies and gentlemen, look, purchasing power of the US dollar has been down for such a long time. Where they had a chance to change it, all right, they haven't. Just because Bitcoin's coming, don't get twisted. If you look at what's going on with Iran and their currency, anyone that converted all their currency, Iranian currency, into Bitcoin, they'd be laughing right now. But that just serves as a use case for the benefit of Bitcoin. But the problem is the powers that you want to make Bitcoin the asset that you want it to be are so heavily invested in dollars that it would take quite a long time for them to unwind everything to get into Bitcoin. So you could say that this is the infantile stage of Bitcoin. We're in the baby years for Bitcoin. Believe it or not, we are in the baby years. Until Bitcoin has absorbed cycles, you guys are focused on cryptocurrency bull market, bear markets. You now need to focus on legacy bull and bear markets. Focus on expansion and contraction. We need to wait for events that are going to lead Bitcoin to come in and step in and be like, yep, this is the alternative. Maybe this could be the case with regards to what's going on overseas and, of course, the issues that the US has. If we start seeing the US government issuing more debt and the yields go up, but Bitcoin doesn't go down, ladies and gentlemen, that will then be the idea of Bitcoin decoupling, because you need it to decouple. You don't want NASDAQ to go down and Bitcoin to go down. Your ETF is a problem because everyone in there is legacy mindset. If it goes down, we're getting rid of it. We're not interested. It's too much of a high risk. All right. We need an event in cryptocurrency which will put Bitcoin on the map, that everybody said, you know what, forget it. Let's go to Bitcoin instead. We haven't had it yet. Because if the stock market drops, Bitcoin is still attached to the stock market. That decoupling, I'm not talking about a 15-minute candle that decouples from Bitcoin decouples from the NASDAQ, and Bitcoin goes up and NASDAQ goes down. I'm not interested in that. I'm interested in events, decoupling events. Those are the events that are going to say, you know what? When the shit hits the fan, we've got to go to Bitcoin. The idea of it sounds great. And people in cryptocurrency want people outside of cryptocurrency to endorse the idea of Bitcoin being the asset to go to when the shit hits the fan. Till we get it, Bitcoin's going to go up and NASDAQ's going to go up. And when they both go down, they go down. And that's what we've got to do. It's about change of mindset, the perception of value. When you change people's perception of value about Bitcoin, then you'll get your Bitcoin to $1 million, in my opinion. All right. With that being said, ladies and gentlemen, I'm off to go and sort myself. In regards to the Platinum members, we've got some setups to discuss, but I'll be tuning into you all later on. Mad love and respect, and please trade safe.